Hi everybody, it's Red. I thought I'd do a video today. Um, Sometimes doing a video is a little bit simpler, especially if I can keep this one under 10 minutes here and only one video. Let's go over a few things. First of all, we're looking at the weekly chart right here, and as you can clearly see, this is now our third week, I believe. Let's see, well, second week. 1, 2, 3, 4, 5 weeks, 6 weeks. We're 6 weeks under the 20 moving average, and 2 weeks, I believe, under the 50. When this thing crosses, it is going to definitely confirm that the high is in for the market. At this point, it's still undetermined. We certainly could rally back up and put in a higher high later this year. No one knows. But for now, as you can see, we are still going down. Look at the RSI here, and you can see it's clearly below 50, still headed down. No signs of it turning back up yet. Same thing here. Yes, we're getting oversold, but it can still go down. As you know, just like you can get overbought, like here, or here oversold, you can do the same thing here. You can continue getting oversold and oversold. And looking on down, we still don't have it hooking back up yet. So that means that this week could still end up being another down week. Now at some point we're going to have a break, and it's going to pop back up and put in a positive week. I think that'll be next week. I think we're going to go down tomorrow and possibly Friday as well, and maybe Monday, or it might go up Monday. It's hard to say, but I think next week will be a squeeze into options expiration, a rally up. Okay, let's look at the daily. Now this is a very, very ugly picture from the bull side. You look at this and you see that the market rallied all the way up here, tagged this 10-day extended moving average, and reversed into the close. That is a topping tail. Very bearish that it wasn't able to go up there and stay. As you can see down here with the daily, the most we got was just one bar. Looks like one bar. It may have been two there, but it looks like one. No, just one bar in positive territory, and we quickly rolled back down. So, and you can see same thing here. We are still heading down. So this is still very bearish. It's kind of trading sideways, okay? So it could pop up if we had something positive there. If the weekly wasn't pushing us down and the monthly wasn't pushing us down, the daily, it could certainly, pop back up here. But right now, I'm just not seeing it. There's no good news out there to make it rally, and you really need something to spark it, to get it going in either direction, either down or up. So, and that's especially in a market when you're just kind of trading sideways right now. When you're at this zero level, you can go either way. You can rally up or you can go down. But the fact that the weekly is pushing us down lends more credibility to the downside. Even though we were putting in a positive divergence here with these two bars here. Then we popped up here, and that was it. And now we're back down again. So now we got to go through this cycle again of putting in a low and then putting in a lower low, or higher low I should say, to put in another positive divergence to go back up, because we've completed this positive divergence when we popped up above the zero line. We just didn't go very far. So so this is looking very bearish. I'm really looking for a big dump tomorrow and Friday. Just the way it's looking, how bearish the market looked today. Let's move on to the 60-minute chart. 60-minute chart, you can see clearly we were in this area clearly oversold. We put in two lower histogram towers and made a positive divergence as we rolled up, as this went down into a falling wedge. So we kind of knew it was going to pop up. We expected it, and it did. Plus, look at all the support it's got there at this 1040 area. So it's got a lot, double bottom. But it's still in this channel, and it's been in this channel since the high, and this has really held us in here. So the market is, until it gets something to really gap us out of this channel, some really good news or something, it's not going to want to, it's not likely to do it. I'll put it that way. It's not likely to do it. So today we rolled over. We peaked, rolled over, and we're headed down into tomorrow. So now you've got the monthly, weekly, daily hooking back down a little, or flat to downward. Definitely a bearish candle on it with the topping tail. So you've got all these larger time frames pointing down in tomorrow. So that's a lot of weight on the market. So I really wouldn't be surprised to see it. The 8:30 jobs data for the initial claims and continuing claims come out really bad and cause the market to gap down and gap below this 1040 area. Lots of times when they can't break through a level like that, they just gap below it. Gap open above a level or gap below it. It's a way to get through these resistance levels or support levels. But keep in mind how many times we've hit it. If you look at it here, it was back here we hit it. It's off there. So it was support there. We've hit it here. We've hit it here. And so it's like 3 times now. So the more times you hammer at something, the more likely it's going to go through it and break. So even if we don't gap down, I think we'll fall through it and go right through it. But I really expect us to gap down is what I'm looking for. On the 15, you can see kind of the same scenario here. We rallied up, and based upon the 60, so you can see when the 60 was pushing up all this time, it was supporting the 15 because this is a more powerful chart than the 15. So as it pushed up, it kept pushing this, and every time this one wanted to fall, it just kept pushing it up. So that's where we go up, trade a little sideways to down. That's a bull flag. Do it again, sideways, bull flag. Why? It's because the 60-minute is pushing it up, not letting it roll back down. But in the end, as soon as that 60 started turning down and this one started turning down, they both really went down and into the close. So if we gap down tomorrow, this is really going to bury this. If we gap down tomorrow and gap below that 1040, I would expect us to try to come back up to work off that oversold conditions. So on the gap down, it very well could try to rally back up at least. Or certainly this is going to try to go up and put in either a lower histogram tower in the positive, or just kind of make some lower or higher lows here on the bottom side as it works its way up. So you can see it's hooking back up, but this 15 just doesn't have a lot of power to it. So the 60 and the daily, they're going to overrule it. So it could gap down, and then while this is running up, the actual price just trades sideways to slightly up, which would be considered a bear flag. That's where we get the bear flag terminology from. So that's kind of what I'm looking for tomorrow. Thursday's looking to be the worst day. Friday, it could be bad too. So I'm expecting us to go down there to around 1,000, the first level. I'd seen from a print on the NASDAQ back, let's see, when I looked at it, this is today's NASDAQ, but I had one where I showed a print of 100.72. So that's 100.72 on the SPY. We haven't got there yet, so I think that was possibly a fake print. So I don't know if that's a target or not, but the 1,000 is certainly a psychological level that they want to go to. You can see this shaded area here. This was the pre-market. Look where it was in the pre-market. They had a print there. We never got there in the pre-market. I mean, we got there in the pre-market, but we went right back there into the close. So it's kind of like telling you that. Now tomorrow, I don't think it's going to get here. I think these were just late fills. I think we're going to go down, but anyway, that's about it for tomorrow. I definitely see tomorrow as a very negative day, and more selling ahead. But next week, I see up, and the following week after that is when I see the big sell-off. That's it for today. Thank you very much.